Hello everyone, welcome back to my channel. Please like and subscribe and hit the notification bell please to support me. I want to show everyone how simple it is to take and purchase a stock inside of their Roth. Um, this is my usual routine that I have found to search for stocks, and it's been working well for me. Let me hit minimize on this. I usually go to this website here. It's all free to use. It don't cost anything. It's called Daily Trade Alert. They have all different kinds of articles on here. It says here who the article's from and everything about it and when it came out. And I usually skim through these articles and read them. They're usually about a page or two long. And then I'll go here to dividend growth investing and hit undervalued dividend growth stock of the week. And to break that down a little further, it means is to buy a stock that pays a dividend that you get at a great value up under what it's actually worth. Think of it as buying a stock on sale. All right. So this week, as we stroll down here, they recommend by Jason Feber, Clorox is his pick for this week. And he comes on down and writes a whole article about it. And we all know Clorox was real big during the pandemic. Um, but now the pandemic's starting to fade and the stock's starting to come back down, which makes it a great candidate for being able to buy it on sale. So you can read all about it here, about how the reduced risk and everything and why it's a good stock. And then you come on down here and it goes talking specifically about the company Clorox. It's a global manufacturer of a variety of everyday consumer products. Founded in 1913, Clorox is now a 22 billion by market cap staple giant that employs more than 8,000 people. So that kind of sums up how big Clorox is. The company has four sales segments: health and wellness, 41%, household, 27%, lifestyle, 17%, and international, 15%. So it's actually a international stock also. Here's some of the major brands that you'll be buying. Uh, Brit, Burt's Bees, Clorox, Glad, and Kingford. So by buying this one stock, you'll be owning all these brands also. That just helps diversify even more your sales. So then I stroll on down after I read all this here, and this is one of the main things you look for in a dividend stock. Is how long they've been paying a dividend and how many consecutive years they've been increasing their dividend. Clorox has increased its dividend for 43 consecutive years. It says it here and down here in the little chart. The 10-year dividend growth rate is 7.5%. So that means that they've been increasing their dividend every year at 7.5%. The inflation-beaten dividend growth rate is very nice, especially when paired with the stock's market-beaten yield of 2.6%. So the yield on dividend is increasing and the stock itself is growing. So you get two different types of growth in this one stock. This yield, by the way, is 20 basis points higher than the stock's own 5-year average yield. The payout ratio is very manageable, 64.4%, which means that out of all their income, they're only paying out 64.4%. So there's plenty of room to grow there. And the current dividend yield is 2.6%. Now that's the same thing as saying you put your money in a savings account and you get 2.6% interest. They're going to pay you 2.6% on your money that you put into your stocks. Oh, Clorox here. The compound annual growth rate is 2.82%. Clorox grew its revenue from 5.2 billion in 2011 to 6.7 billion in 2020. Meanwhile, the earnings per share increased $4 to $7 over this typical period, which is a growth rate of 6.95%. So out of every share that's how much that they're making per share. It's like you have to think about it as you own a piece of a company. Per share is a piece, and for every share, that's how much is making earnings per share. To break that down a little more, and so the way this fellow here does his articles, he comes on down and he researches other people's predictions and what the company's worth, and then he takes and uh, he comes up with a figure of what the stock is actually worth, the valuation, and then you got your price to earnings ratio. You always want this number to be lower when you buy it. If it gets up above 40, it's usually time to sell if it's a stock that you think might be fitting to bottom out. So the valuation right here, after doing all these different um, figures and calculations, comes out to be a fair value of $193.51. Now that's combining three different valuations here. One's from the CFRA, and then one's from the let's see, the Morningstar, and his. He averages them all three together. So he's saying that the stock is 8% undervalued. And you can see the chart right here. And I do agree. And then you can come on down here to the bottom line. Clorox is highly quality company, great brands, incredible consistency. It's 8% undervalued. And then here is a note down here from the Daily Trade Alert that they add onto the bottom of his articles. And they use this other website called Simply Safe Dividends, which their main job is to rate how likely a dividend is to be sustainable. And then there's a score down here, the dividend safety score. Uh, let's see. And the higher the number, the more safety it is for it being unlikely to be cut. And they rank Clorox at a 75. So that puts it over here in the safe, unlikely to be cut. Now, I agree with that also. So after I read all that, I come on up here and do a little research myself. I come to the main company's website. Most of the time they have one set up that is for the general public. You come look at it, see all the different kinds of things that the company's doing, the different products that they have. You can do hours of research per stock that you're looking into. And then lots of times a company will have a investor page set up. This right here is the Clorox Company investor site, and they're talking about their dividends here. And you can see how they have been increasing their dividends every year. And in 2020, they per share they paid $4.34. And this is when they declared it, the ex-dividend date, the record and payable and amount and type. They pay a dividend every quarter. All right, now at this point, I done decided that I'm going to take and purchase some Clorox stock. So I need the ticker symbol, and you can look it up, or it's wrote right here. It's usually, I mean, it's wrote several places, but see here's CLX. It's Clorox ticker symbol. It's also wrote up here on this little chart right here, CLX. So I come over here to my Roth IRA, and I also look at here at some of the stats. Their 52-week range is a low of 170 and a high of 239. And you can see this here little diamond is where it's sitting right now. And you can come over here and look at the chart, and you can see how it has come down to make it a good buying opportunity. So here's my Roth that I just started this year. And I say, well, I'm going to take and buy some Clorox. So I type in CLX, and it says right here, Clorox Company, the common stock. And I'm going to buy some. And I come right down here, and it's $180 a share. And I have $500 available to trade. So I go 500 divided by 180.49 gives me 2.7. So you have to round off to an even 2. So type in 2. I got the action at buy 2 shares. I'm going to put this at a market order. It's for today. Review order. Then I skim over everything, make sure everything's like I want. Clorox Company, it's going to cost $360.86. The rest of the money of that 500, what's left, will just sit there until next week when I purchase some more stock. Come over here and hit place order. All right, it was placed. It says right here it was filled. I bought 2 shares at 180.3648. So now I'm going to go over here to my track my dividends website, and this is my Roth, and I add a holding CLX Clorox, number of shares 2, just to double check the price again, was 180.36. 180.36. Add holding. Now this is updated. See, my dividend yield inside of my Roth is 6%. Yield on cost, which will go up as time goes along, is 6%. My annual income inside of that Roth is $112. The beta is the amount of volatility that you have. Anything above 1 is means that the stock is volatile and it goes up and down a lot. Anything below 1 is pretty stable. You see, I have 3 stocks inside of my Roth right as the moment. And then here's the expected dividends. Should get $10 in August, $18 in September, and then it just keeps repeating. And then should go up next year, and the next year, and the next year. It should keep increasing with the dividend growth rate. Well, that's all there is to that. Thank you, and have a good day, and I hope everybody enjoyed this content. Thank you. Bye.